Hi there, you have tuned into Market Fatafat on ET now. I'm Shrishti Sharma and this is the show where we highlight all the buzzers in trade right now, either on the back of the news flow or on the back of the technicals. In a short while from now, we will connect with our team then. But before that, let's have a quick look what the markets are up to. So markets turning to be very much volatile in today's trading session as well as under pressure because Nifty 50 is now down about 100 points and 24,100 is where Nifty 50 is actually trying to take some support. Let's see whether or not it gets successful there or not. But on the flip side, Nifty Bank is also down about 400 points and that's 0.8% cut coming in on that particular index. A lot of these heavyweights actually in the last half an hour or so are seen to be under pressure. Stocks like HDFC Bank, ICICI Bank, even Kotak Mahindra Bank is seen to be losing its shine. But on the flip side, what is lending support? Then the clear winner today is the oil and gas space. Because if we look at ONGC as well as some of these city gas distribution companies, stocks like Oil India, they are having a great day today. Yes, indeed, globally, there has been a spike in the crude oil prices. Back home, a brokerage action seen on ONGC as well as city gas distribution companies do also have a news flow. Some of the auto counters, Tata Motors and Maruti Suzuki continue to do well and the broader markets till now are supportive. But with this, viewers, let's move on and let's start highlighting all the buzzers in trade. But before that, let me welcome Arpit Beriwal on the technical side as well as on the research side. Ria is here with us. A very good afternoon to both of you and thank you so much for your time. First up, let me highlight the first stock then, and that is ONGC because that is Nifty 50's top gainer today. Because on the back of Jeffrey's note, this stock is seeing a good day. They continue to maintain its buy rating. And look at the target price, 375 rupees is what they are targeting. Firstly, onto the stock price, they're highlighting that the stock has been under pressure in the past 3 months and that appears to be overdone now as per Jeffries, with earnings impact limited to like 2%. 95% of the domestic crude production is being capped at $75 per barrel mark earlier, and taking cues from that, they believe that it should not get and build in more pressure for ONGC. Onto the earnings front, their consolidated EPS should also benefit from the improved earnings outlook of HPCL, and the recent regulatory actions bode well for improved profitability. Likely ramp up in the KG Basin production in Q4 FY25 and going beyond in Q1. Those are some of the triggers for the stock. So on the back of this report, ONGC is having a good day today at the day's highest point right now. But with this, let's move on and Arpit, let's talk about your first stock then. And today, IT is the clear loser. And from the pack, HCL Tech is on your radar. A strategy to buy on the dips, or you believe that the stock could be in for some more pressure?
Yeah, so very good afternoon, everyone. If we see overall IT index, however, today we have seen some profit booking from the higher levels. But if we see the monthly setup of the IT index has been quite strong. In spite of market volatility in the last couple of weeks, IT index was relatively resilient. And within that, if we see HCL Tech has been a huge outperformer. So technically, if we see the chart setup of HCL Tech, it is continuously strong uptrend. On the weekly scale, the base of the stock is shifting slowly, gradually higher from 1600 to 1700 and from 1700 to 1800 and now trading a life high trade piece. So looking at the setup wise, slow and steady move is seen from HCL Tech. And positionally also, if we see IT index, the outlook for us in the new year 2025 is quite strong and HCL Tech is likely to outperform. On the daily scale also, technically it is holding well above 50 DEMA and again bouncing from the lower zones, which clearly indicates that the bigger trend of the stock is positive and slowly steadily we can expect another 8 to 10% rally in coming 1 to 2 months positionally. So HCL Tech would be a preferred pick within the IT pack. One can go long at current levels or minor dip in between 1920 to 1930 zones with keeping stop loss of 1870 for an upside move towards 2050 and then 2100 levels.
Right, that's about HCL Tech then. And Ria, let's talk about your first stock there, and that is indeed the stock of the day, Avenue Supermarts. Take us through the news flow here.
Well, yes, so Avenue Supermarts has been in focus today. It had hit upper circuit of 15% earlier in the session after reporting a very strong performance for the third quarter of FY25, with the standalone revenue from operations reaching about 15,565 crores, marking a 17.5% increase compared to the third quarter of last year. By December 31 of this year, the company had 387 stores in operation, adding 10 new stores in this quarter. CLSA has maintained the outperform rating on the stock with a target price of rupees 5,316, saying that the revenue growth is in line with their expectations. However, Morgan Stanley and Macquarie have both maintained the underweight rating on the stock with a target price of about rupees 3,700 each, and they believe that the weak growth trends continue to weigh on the stock and that the growth trends remain well below the historical 20% top line growth algorithm for the business. Nonetheless, the stock is still holding on to strong gains of about 12% as we speak.
All right, that's the news flow coming in on Avenue Supermarts. Even brokerages has come out with a positive note on this counter. We're moving on to the next stock then, and on the list it's Trend. And Arpit, take us through how do you see the setup coming in from Trend? This has already been an outperformer, but where do you see the stock headed?
Yeah, so if you see overall, last couple of months has been quite volatile, especially for the mid-cap index. So if you see the trend, the monthly setup in last couple of months, we have seen a sharp corrective move from 8,000 to 6,500 levels. However, in the last month, December series, good recovery was seen from lower levels. So on this weekly setup wise, from last couple of weeks, it was consolidating between 6,800 to 7,000 level. Last day, couple of days back, we have seen a range breakout above 7,150, 7,200 levels. So the bigger trend of the stock was positive, and now that again it has regained its momentum. So I think risk reward wise, the setup is quite strong. Range breakout on weekly scale that clearly indicates that buying is visible at lower levels. 7,200 was the initial hurdle that would likely to act as an immediate support. Going forward, we can expect good rally towards 7,500, 7,700 level. So one can go long at current levels with keeping stop loss of 7,100 for an upside move towards 7,500 and then 77,550.
Alright, those are the levels that you should be tracking when it comes to Trend. But moving on, let's put the spotlight on Petronet LNG because that counter has been in focus, because just yesterday we had the City note coming in and then a clarification in the second half of the trading session from the company, wherein Morgan Stanley today has come out with a note. They continue maintaining their equal weight stance with a target price of 400 rupees. They are saying that PNLG remains a high ROCE stock through the cycles. They see upside to the utilization rates for its terminals, and LNG prices normalize, and that is expected to support demand by March 2025. They see the competitive risk as less an issue now. And Petronet LNG brings its own low-cost brownfield capacity to the market in the first half of 25. So they are positive on Petronet LNG, and hence the stock is in focus today. Seem to be holding a 1% gain right now. But with this, the next stock that we're going to discuss is Jubilant Food. And Arpit, within this whole consumption space, Jubilant Foodworks has also been buzzing away in trade. Talk to us, how is it looking on the technical front?
Yeah, so if we talk about the overall consumption theme, Jubilant Food has seen good momentum in the last couple of months. And if we see technically on the monthly scale, it has given a classical cup and handle breakout. That's a bullish price pattern above 720 levels. And that clearly indicates that the trend of the stock has totally changed. And from going forward, we can expect resume its uptrend. On the weekly scale, also give a range breakout above 730, 735 levels, form a strong bullish candle. On the daily scale, the high rise, high low structure is intact. It clearly indicates that the stock is outperforming apart from the broader market itself. And I think slowly, steadily, in a couple of weeks to a month's time, we can definitely see a double-digit returns in this stock. So Jubilant would be a preferred way within the consumption space. One can go long at minor dip because we have seen a good rally from 650 to 760 levels. So a minor dip towards 720, 730 would be a good entry point with keeping stop loss of 660 for an upside move towards 850 and then 900 plus.
That's about Jubilant Foodworks. But Ria, talk to us what's happening within the consumer durable basket and why are these counters in focus today?
Well, yes, today Nomura has come out with a note on the entire consumer durable segment. They've said that structural drivers are going to sustain a healthy momentum going forward for this entire pack. Macro tailwinds in EMS specifically are going to drive strong growth, and slower growth in most durable segments is what they expect going forward. Structural growth drivers are going to support growth in ACs and cables, while there is going to be slow growth in some other segments. For EMS, the scale up is on track, but they do prefer Dixon Tech and Voltas. For Dixon, they have maintained their buy rating with a target price of rupees 22,256, and for Voltas, they have maintained a buy rating as well with a target price of rupees 2,142.
All right, that's coming in on these consumer durables. But Arpit, M&M has been one of the strong movers within the auto space. Tell us, what are the levels that you're tracking in this?
Yeah, so talking about auto index, and this has been quite a outperformance. If you see, auto index was in sharp corrective move since September series. However, in last couple of days, we have seen some bounce back from lower levels. If we talk about M&M, it has been quite resilient in spite of market correction in auto stocks. So technically, from the monthly scale, the stock was consolidating between 2850 to 3050 levels from last 6 to 7 weeks. On the weekly scale, now last week it's doing a range breakout above 3050 levels, and it's now trading at life high territory. That clearly indicates that the base of the stock is shifted higher, and as soon as we see more recovery from the auto index from the lower levels, the stock is likely to scale new record highs. So we have seen a good rally in last couple of days itself from 3000 to 3200 levels. But positionally also, looking at the monthly setup, the stock is likely to head to new life high towards 3300, 3400 levels. So we are quite strong on this counter within the auto pack. M&M would be a preferred pick within the auto space. One can go long at current levels with keeping stop loss of 3080 for an upside move towards 3300 and then new life high towards 3400.
That's about M&M, but sticking with the auto space then, and we also spoke with the management of Bajaj Auto, wherein Rakesh Sharma believes that the electric two-wheelers are expected to grow at a 25 to 35% in the next few quarters. Let's go across and listen into him.
We have to see this in that context, the penetration increasing in the context of iScooters itself doing very well. The concept of EV in two-wheelers is here to stay in the mind of the customer. Any customer now today buying a scooter certainly considers EV as an option, whether they buy it or not, depending on pricing, power or purchasing power or other anxieties. That's a separate question. But almost everyone is considering e-scooters as an option. So it is very much here to stay. There may be some limits which will come upon it, like charging opportunities and stuff like that. But at this point of time, we definitely see, it's been growing at 30-35%. So we see that that growth rate with a little bit of bumps up and down, when policy announcements are made. But I think we can expect the growth rates to be 25-30%. In the coming quarters.
Welcome back to Market Fatafat, a show where we are highlighting all the buzzers in trade right now. And let's put the spotlight on the power financiers, because stocks like REC and PFC, they are having a good day, because MK today has initiated a coverage on both of these names. For PFC, they have set a target price of 600 rupees, and for REC, their target price is around 650 rupees. They are saying that with the planned capex of over 33 lakh crores during FY23 and 32 in generation, transmission and distribution lessons learned, they should bode well, and the lessons learned from the previous cycles should clean the past baggage that has been seen. Now, valuations are being despised with higher than the long-term median is around 0.7 times. They remain palatable for the growth and the profitability profile. The controlled upcycle in the power capex and the lending is here to stay. On the back of this brokerage note as well as the positive commentary, both of these companies are in focus and holding on to good gains right now. But with this, moving on, Arpit, talk to us about PB Fintech. Off late, the stock also has been buzzing. Take us through, how do you see the setup?
Yeah, so if you see overall, the new age companies has seen a very stupendous rally in last couple of weeks also. If we talk about PV fintech, the chart structure on the monthly scale it is forming high rise, high low structure from last couple of months. On the weekly scale, it gave range record above 1850, 1880 levels, and then from there on we have seen a very good rally in last couple of days itself. So technically, if we see the setup wise on all three time frame, it is very strong. On the daily scale also, it given a range breakout, and slowly steadily the stock is moving higher. So I think from a positional perspective, or also the next leg of rally has already started and likely to see a good momentum of 8 to 10% from current levels to reach new life highs territory. So PB Fintech one can go long at current levels or minor dip in between 2180 to 2200 levels with keeping stop loss of 2100 for an upside move towards 2300 and then positionally 2400 plus.
Big target set for PV Fintech, but Ria, talk to us about Biocon and tell us why is this stock in focus today?
Well, yes, Biocon is in focus since a wholly owned subsidiary of the company has received approval for a drug called tacrolimus, which is an immunosuppressant. Now, this approval has been given for capsules in 0.5 mg, 1 mg and 5 mg strengths from the National Medical Products Association Administration or the NMPA in China. And this approval further adds to Biocon's portfolio of complex drug products and will be commercialized in the region in an expedited manner. Despite this positive news flow, we are seeing some selling pressure on the stock today, trading with cuts of just about 1% as we speak.
All right, that's the news flow coming in on Biocon. But with this, viewers, we are completely timed out in this edition of Market Fatafat. Thank you so much, Arpit and Ria, for joining us today and highlighting all the buzzers in trade right now. But with this, it's a goodbye from me and the entire team who put this show together. Thanks so much for tuning in.